If Bitcoin price were to fall and some of the miners who are still major holders of Bitcoin would need to sell them because the price went down, people are not fat. As they become part of the grid optimization, two things happen. Number one, they have a new revenue stream that's coming. And that revenue stream means they don't need to sell Bitcoin as much because it's not their only business line. So they're diversified. The second thing that becomes very important is pension funds have viewed Bitcoin as anti-ESG. And if all of a sudden now the E becomes a positive for Bitcoin because they're actually helping the energy situation by forcing more renewables to replace dirty coal, and they get another point. So I think all of these things will be narratives next year. And the price of Bitcoin, if I'm right on that, should start to go higher because it should start to build that in. And I think Bitcoin miners are going to become an important part of the puzzle now.
Bitcoin's reached a critical stage. The explosive early growth is behind it. Retail investors and a few corporate buyers got it this far, but that base alone can't fuel the next breakout. For Bitcoin to move meaningfully higher, it needs acceptance from traditional finance, pension funds, institutional investors, and asset managers with real capital to deploy. Jordi Visser says the network effects are strong, but the money behind them isn't yet deep enough to shift a trillion-dollar asset. What's missing isn't belief, it's scale. Meanwhile, the global economy is feeling the pressure. Slow growth and social tension usually push governments toward more spending, stimulus checks, housing aid, or new subsidies. That injects liquidity into the system but also exposes a deeper issue. Profits keep rising while wages stall. People start to lose faith in how the system works, and that loss of trust feeds directly into Bitcoin's appeal as an alternative store of value. Visser also highlights an overlooked transformation in mining. Once seen as an energy drain, Bitcoin mining is evolving into part of the energy solution. Mining operations can stabilize electricity grids, absorb excess power, and integrate with renewables like solar and battery storage. That shift could completely change how large funds view Bitcoin. Pension funds that once avoided it over ESG concerns may soon see it as a driver of clean energy investment, a bridge between finance, technology, and sustainable infrastructure. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Yes, seasonally, this is a great month, but the last 5 years, the next 6 months have been good. And I think there's a lot of people who were kind of timing the end of October as the end of the halving time and things were going to get dicey. There's a major story, in my opinion, that's shaping form. So I've talked about being wrong on where Bitcoin would be at this point. And it surprised me because of the network effects that were happening, but also everything that was happening on AI that to me is directly related to it. But one of the things that became obvious to me this year is that for Bitcoin to really be making the move that we all think it should be, there actually needs to be a lot more acceptance by people outside of just corporations and treasury balance sheets. Because that's, honestly, except for MicroStrategy at this point, the majority of this is kind of this zombie type thing that Saylor talks about. It's not a big number. It's not something that when you add them all together is enough to really drive a major price move. To drive a major price move, it can't just be retail. They're not big enough. It's a big enough asset now. So if I think about what drives things like Oracle and Tesla and big companies like that, Bitcoin's bigger than most of them. So it needs to actually have a lot of energy and heat behind it, which means we're at the stage now at this size that I think the traditional finance world needs another group in. So my mindset that I use with everything is that prices lead narrative. So I focus on what the narratives will be 6 months from now. And to me, it's very obvious. And I'm just going to go through for you kind of what I see happening now that is a major story that we've talked about. So everyone who's watched this all year,
they're educated. They're educated.
None of these are going to be surprising, but I think they're all coming to a head now. So the first one is the job situation. So there's no doubt we have enough data now. It's not just the BLS numbers. It's all of the soft surveys that I cover in my weekly videos. People feel bad about their job. And regardless of whether it's 100% artificial intelligence, AI has an impact to it. Your brother and I talked about it last week in terms of all of the things that happened in the month of September and how crowdsourcing is now saying that AI is coming. 3 of the 4 largest employers, private sector employees in the United States of America, Walmart, Amazon, and Accenture. Accenture had a big layoff announcement this week. All 3 of them have publicly come out and said they will be laying people off, or they have laid people off. And number 2, that they don't expect to hire anybody in net over the course of the next few years. And they're all saying AI is part of it. There's a bunch of other companies which we don't need to go through, but the pressure is growing on this belief. We had the ADP number this week. It was negative. There's no doubt right now that the job market is an issue. And this feeds into a couple things. Number one, for the jobs market, that means the discontent for people is only going to worsen. So anything disruption-wise that's coming, if people are not able to pay for housing and they can't do this is going to be an issue, which puts pressure on the administration in a year of the midterm elections. So I don't care what kind of printing goes on. I don't care if it's giving people tax rebates out of the, whatever it is. There's going to be checks going out. There's going to be help on the housing side, because if you want to win elections, and that's the whole thesis that we've talked about in terms of Bitcoin, the discontent in the system, the profit margins are going up and the people are losing their jobs. So this is going to be a story that will only worsen next year because AI agents are coming. Number 2, this power situation is really important for AI. And I believe the Bitcoin miners are going to become a major story next year. This is another place where the traditional finance world. So if they can't invest in the Mag 7, they're going to look in other places. If they look to Bitcoin mining, they probably haven't done their work. We have a gas turbine and a transformer shortage. We need peaker plants. Bitcoin mining is a major positive tool for grid optimization. China has built all of their renewables. Solar has been a huge part. Even in the US, we're still building solar. To me, solar, batteries, plus Bitcoin miners are going to be a package that people are going to start to understand has to be part of this equation. And as part of this equation, that means that the hash rate, as it's going higher, if Bitcoin price were to fall, and some of the miners who are still major holders of Bitcoin would need to sell them because the price went down. People are not fat. As they become part of the grid optimization, 2 things happen. Number 1, they have a new revenue stream that's coming. And that revenue stream means they don't need to sell Bitcoin as much because it's not their only business line. So they're diversified. The second thing that becomes very important is pension funds have viewed Bitcoin as anti-ESG. And if all of a sudden now the E becomes a positive for Bitcoin because they're actually helping the energy situation by forcing more renewables to replace dirty coal, and they get another point. So I think all of these things will be narratives next year. And the price of Bitcoin, if I'm right on that, should start to go higher because it should start to build that in. And I think Bitcoin miners are going to become an important part of the puzzle now.
Tokenization is about turning real-world assets, stocks, property, art, even housing, into digital tokens that can trade around the clock. Jordi Visser says this idea is no longer theoretical. Regulators and major platforms like Robinhood are already talking about it. Once it's in motion, everything becomes liquid, instantly tradable, and globally accessible. This shift could open the door for a new wave of entrepreneurs, not just crypto traders, but builders creating tokenized systems for ownership and finance. Visser says the real power lies in the network effects. Every transaction and every asset moved on-chain expands the ecosystem's reach. It's not just linking crypto with traditional finance, it's dissolving the boundary between them. As markets like real estate and private equity move toward tokenization, transparency improves and capital flows faster. Deals that once took weeks could happen in minutes. Liquidity stops being a bottleneck, and trading becomes continuous. But this new environment comes with a different tempo. In a tokenized world, value can shift overnight. Assets can double in weeks, and hesitation starts to look like missed opportunity. Retail investors already live at that speed, constantly connected, constantly trading. Let's get back to the interview.
So I want to bring up one thing to people before the tokenization thing. ChatGPT had a few announcements this week. They had some new tools come out. Pulse, fantastic. I've already used it significantly. Sora 2, video, that'll melt some more GPUs. So they're looking for revenues, they're looking for staying in front of everyone, get more users. But the other thing which got less, I think, press was their agreement with Shopify and with Etsy. So if people go back to June with Shopify, you can make payments there with stable coins. So again, AI, think of Shopify and ChatGPT is a way to compete with Amazon, a way to compete with Google through advertisements, stuff like that. And on the other side, stablecoin is an option on payment on Shopify. When you put all that together, which has all happened in 3 months, and you start thinking about what tokenization is coming, and I say tokenization because the government is telling people, and obviously Vlad at Robinhood is talking about this constantly, 24-hour day trading of everything eventually. Illiquid assets. And so in the recent Moonshots podcast, Ahmad Mostak talked about this. And he made this comment, if you want to see a bubble, real bubble, AI is not a bubble. If you want to see a bubble, what's going to happen? It's going to be the amount of entrepreneurs that are going into crypto for tokenization and what you can do with it. There are so many things that this unleashes. But most importantly, what he talked about was the network effects that'll come from it. And I've talked about the importance of network effects from stablecoins, transactions. What he's talking about, which I didn't think about, is a massive movement. Because if you have tokenization happening, you're talking about big dollars transacting constantly with fiat assets. You're another bridge between the two, just like an ETF, just like a stablecoin. All of these bridges are being created. But tokenization, to me, will dramatically increase the network effects immediately. And there's an element of the prediction markets, like you said. I'm not sure everyone has really looked into the impact of tokenization, but I do believe entrepreneurs will be there. They'll find ways to release money in housing and all the things that we've talked about that are necessary. And if you bring transparency and liquidity into the illiquid markets, and you're bringing more transactions into things 24 hours 7, you're going to get a lot more moves. You're going to get a lot more things going on. And that's going to make the world very transactional. And most importantly, the speed is going to intensify. And this was the thing, again, if you go back to the Druckenmiller retail side, hedge funds have a process. I look at names and then I gradually invest. Well, if Micron Technology goes from 60 to 180 in 5 months, and they've been doing their work for 3 months to see whether they should buy it. They've had all these people come in and the stock's already doubled. It's very hard to buy something when you started your work at a price 100%. And it's doubled. And 100%. Then people are like, let me move on to a next one. Retail has speed. Speed is happening. Tokenization is going to bring more speed. Everyone needs. It is highly deflationary. And this combination of crypto, meaning getting rid of the middle person with inside the financial guardrails. And I can't emphasize this enough. All of the things with closing on a house, how many things go on? Crypto and AI are going to gradually compress that. This is highly deflationary and it won't happen overnight. So this is not something to go. But what it is this offset of, like, when you're thinking of the Fed's cutting rates, guys. They're cutting rates with the economy growing at 5% nominally. We have no job creation. This is basically the productivity thing you were seeing. Now, is it good for people? It's good for capital and profit margins. It's not good for people. It's great for entrepreneurs because they're the ones that are sowing the seeds. The guardrails of the financial world and all the things you mentioned are not coming from big established housing companies. They have to come from technology-friendly companies who already have the culture and have the ability of using these tools. And I think people just need to be on top of this because this stuff is going to happen as the regulations come down and the acceleration happens. It's going to be going incredibly rapidly the next few years. And that's why profit margins are a trend that are just going to stay there. You're going to have deflationary pressures. You're going to have job disruption, which means the Fed's going to be cutting rates. The economy is going to be fine because, unfortunately for the economy, it's a combination of building out the capex necessary for AI and the consumption that unfortunately happens from two levers. One is from the top down, which is the wealth creation from stocks. And the second thing is the transfer payments that the government's doing. They're going to have to increase the transfer payments as the disruption gets bigger, especially as we go into an election year. That is so pro Bitcoin. That is so pro crypto in general. People need to start making the connection between the traditional finance world intersecting, whether it's power and Bitcoin mining, whether it's housing and all the disruption that comes. They have to make those connections because this is the next 3 years where it's going to happen.
Something profound is unfolding at the intersection of technology and money. The groundwork for a new financial operating system is being laid, not through central banks or policy, but through code, connectivity, and participation. Bitcoin stands as the test case, a self-sustaining network proving that trust can be built without intermediaries. But tokenization is where that proof scales. Once ownership of everything, from property to equities, can move as freely as data, the entire definition of liquidity changes. Markets will stop sleeping. The friction that once slowed global finance, paperwork, clearance times, intermediaries, will vanish into algorithms. In that landscape, traditional finance won't disappear, it'll evolve. Pension funds and institutions, once cautious and rigid, may find themselves investing not just in assets but in ecosystems that generate both returns and resilience. Clean energy, decentralized infrastructure, and tokenized markets could merge into one continuous digital flow of value. What used to be separate, money, technology, energy, will operate as a single circuit, adjusting in real time to demand and innovation. And as this convergence accelerates, the real question isn't whether digital finance will dominate, but whether society is prepared for an economy that never pauses, never resets, and never forgets. When every asset is liquid and every transaction is permanent, what happens to the concept of patience, stability, or even value itself? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.